Hey everybody, my name's Allison Ostrander and I am the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to look at a potential bullish trade to consider on SPX. A few reasons why I'm looking at a bullish trade. One, the overall trend is bullish. We've pulled back into the ATR trailing stop. We're starting to bounce off of it. It's a nice level of support. We have a great daily squeeze setting up. Still some pullback here on the lower indicators, but the good news is momentum bars are above the zero line, so it keeps all of that bullish strength, that bullish inclination still in mind. And then, of course, we have two bullish divergent bars. For those of you who don't know what this is an indicator I have where we look to either retest the high of the bullish divergent bar that prints or get a higher high within the next 3 bars. So we have a valid one from a few days ago, right back on the 20th, looking for a move back up to or above 61.3450. We're also attempting to print another one today. Now, they don't always follow through within 3 bars, but you can see a lot of the times they do. This one got a higher high. This one did. This one took 2 bars to get it, but same move. Here was a higher high. Here was a higher high. This one barely followed through with a higher high, but it was there. This one did. This one took 4 days instead of the normal 3, but you guys get the idea. So what I was looking to do was to maybe give myself a little bit of wiggle room, right? You could technically go with just tomorrow's expiration. I'm looking at Wednesday's expiration right now, just to give it a little bit of additional time. You could also bump it all the way out to Friday if you wanted to. But then I was looking at something like a broken wing butterfly, 6090, 6110, 6120. This would encompass 6100. It's a 2010 butterfly, so your cost basis is about $2. It's an $18 max profit potential if you pinned here at expiration. If you go completely in the money, it's still about an $8 profit potential. Excellent risk versus reward. If you want a slightly smaller risk, you could go with a 2015 spread. You could do a 1510 spread. You could do a different variation, but I would keep it as some sort of broken wing butterfly. And the reason why our target is technically 61.3450. Now, it seems a little far away, which is why I'm looking at slightly closer strikes. But if we were to get up to that target by tomorrow, right, per the 3-bar rule, maybe some news comes out that we're not aware of that helps bounce the market. And if this butterfly goes completely in the money, you have that forgiveness factor, right? Like I mentioned, you have $8 of additional profit. So personally, I would still look at it as a double debit broken wing butterfly for that forgiveness factor. But they also allow for a very small risk and excellent profit potential, which is why it's usually one of my favorite strategies to trade. So just some ideas. You could also, if you don't think we're going to get that strong of a bounce, but will at least hold this level as support, you could consider something like an unbalanced butterfly. Right now, an unbalanced butterfly at 6,000, with the idea we're not breaking below that by Wednesday, is giving you about $1. It's bouncing around a bit. Let's call it $1.20 of credit. That's a 380 risk. So if it really breaks below 6,000, you'd have to be okay with that capital cost. If it pinned, you have a max profit potential of 620. And if it remains out of the money, the premium you received here is your profit. So not too bad of a risk versus reward there. If you don't want to play it as directionally, this might be something to consider. The downside is it also costs a little bit more risk. So just understand how that works. Thank you all so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time.